Hello, welcome back to StephenTozerRealEstate.com.au. Today we're talking about getting your finance sorted first. Now, it doesn't matter whether you're looking at buying or whether you're looking at selling, it is very wise to get your finances sorted first. And what I mean by that is probably the best option for you there is to speak to a broker. Now, a lot of people think, well, I've been with my bank for 5 years, 10 years, 20 years, they're going to look after me. Well, that's not always the case. You see regularly advertised, they'll have a special promotion listed for new customers. So it is probably best to speak to a broker because he can give you an objective view across a number of different lenders. The other thing is too is that if you go to a bank, they're not going to tell you that the bank down the road is giving a better deal than what they are. So if your bank is giving the best deal and you speak to a broker and then you already find you're getting a good deal with your bank, well then great, go back to your bank or you can deal with the broker, whoever you choose to go with. But it is probably best to do that. And also, your bank might have been the best bank when you went through them initially, if you had a mortgage previously, but they may not be now. Just like with anything, banks change their policies, they change their rates. It may change because of the availability of money. It may change because they're trying to offer new customers. The money from overseas or where they get their money from may tighten up. So therefore their policies change all the time. Also, different banks have different policies depending on your loan to value ratio, meaning the percentage of the purchase price, whether it's 50% or 70%, 80%, maybe up to 95%. Different banks will move that percentage up and down to suit their business. At the end of the day, they're there to make a profit. Now, when you speak to your lender or your broker, you must sort of work out all the different costs that are going to be associated with your purchase or your sale and your purchase. And what you don't want to fall into the trap of, particularly if you're selling, is inflating the price of your property to help you achieve an objective to move into the next one. And what I mean by that is your property may be on the market price may tell you X price, and by the time you add in all your other costs to help you achieve that next property, you may want to inflate it by 10%. Well, that's not really the way to go. Think of it this way. If you're going to buy a Porsche and you currently had a Holden, and you want to sell your Holden, but you're not going to inflate your price of your Holden by 10 or 20% to help you pay for your new Porsche, just because your Porsche is a lot more expensive. So bear that in mind. So when some of the costs you need to take into consideration is stamp duty. A lot of people forget about stamp duty. It only applies when you are buying a home, not when you're selling a home. So it's only on one purchase, but again, doesn't matter which state you're in, you've got stamp duty to consider. Fortunately with Queensland, we tend to be one of the cheapest states in Australia, but we do have 3 different levels. We have first homeowner, and investor rates. First homeowner, generally there's only a couple of $100 potentially. Homeowner, it's generally around 1% of the purchase price, although it does scale up a bit once you get over 600,000. And then we have investor rates, which is generally about another $7,000 plus on top of the homeowner rate. So take that into consideration. Also, when you're selling, you've got to consider household insurance. You've got to consider your agent's fees and your solicitor's fees. So they're all the type of things you have to take into consideration when you're moving. But once you go to your lender, you go through the process to find out, I guess typically called the pre-approval, and find out whether you got any issues. That you're not going to have any surprises, that you won't go along and you agree on a contract on the sale of your home, and then you go to purchase another property, and then you might have something that may not suit your lender, or any lenders for that matter, whether that be employment related, any previous credit issues that you may have. And again, that is going to matter to the lender depending on the percentage that you are borrowing. Obviously, if you're borrowing 95%, everything's got to be squeaky clean. You've got to be with your be with your employer for quite some time. Have no credit issues. Have a good deposit. Have a steady savings plan. Whereas if you're borrowing under 80%, some of those bars are a little bit lowered and you get a little bit more flexibility. But you don't want to sort of go along and find that you have your heart set on something and you can't achieve it. Also, you need to find out with pre-approval that it's just a little bit more than just, yes, I can give you this money. And that's why you need to go through the whole process. So with your broker, he will know which lenders will give you a proper pre-approval. And what I mean by a pre-approval is the only thing that is outstanding is going to be the valuation on your potential purchase. Your credit checks are done, your employment check, your savings plan, everything else is done. It's only the valuation of your property that's still outstanding. So you want to get all that done so you can move quickly should you need to when the time comes. It is better to have everything set up to maybe beat that person at an auction or in a multiple purchase situation, multiple offer situation, or whatever the case may be. So meet with your lender and or a broker, get yourself sorted, and you'll be able to have your whole process go through very smoothly. My name's Stephen Tozer. I hope you enjoyed that video. I'm Centenary's most trusted opinion. I'll see you on the next video. Bye for now.